Palisade Radio is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell, and it's been a momentous day for gold today. This is Thursday, February 11th. Price of gold is up over $50. So we wanted to get Jordan Roy-Byrne from thedailygold.com back on the show. Jordan is kind enough to put together weekly market updates that we send out through Palisade Radio. Jordan, welcome back to the program.
Thanks for having me, Colin.
So the big question on listeners' and investors' mind is, are you confident at this point that the bottom is in for gold and for gold stocks?
Well, I think I'm very confident as far as gold stocks, just given the strong move that we've seen in recent weeks. I compared it to the moves coming off the major lows in 2000, 2008, and it's very comparable to that. Now, interestingly, with gold itself, in my last premium update, I kind of talked about how gold has had a good move, but gold is behind its major rebounds coming off major lows, the two in particular, 2008 and 1976. So coming into this week, gold's rebound was not as strong as those rebounds. And that doesn't mean that it's still in a bear market. The real key that I was pointing to this week for gold is it's got to close this month above 1180. And it needs to, if you draw a trend line on a just like a daily line chart of gold, the trend line resistance is coming in around 1200. So 1180 to 1200 is really the key resistance. Again, coming into this week, and what I've been telling subscribers is we need to see gold get above 1200, and that 1180 to 1200 level has to become a floor. And obviously today with gold going up substantially, $50 or so. I mean, it's trading at $12.50 right now. It traded as high as I think $12.61 or $12.62. That obviously raises the chances that gold will close this month above $11.80. I mean, we're only a little more. I mean, we're about 40% done with the month or so. So there's still a lot of time left in the month. Looking at resistance, I see monthly resistance around 1275 for gold. Now the gold VIX GVZ is up about 38% today. That typically, that when you see that, I mean, that's a sign that the trend is probably going to change. So to me, I think gold could go a little bit higher here to around that 1275 target. But I do think at some point, perhaps in the next couple of weeks or the next month, we'll see gold come back and retest that support at 1180 to 1200, and I mean it probably should hold above it. But basically, the first key for me is let's see if gold can close above 1180 this month, and obviously with today gold looking like it's going to close at 1250, that raises the chances significantly that gold will close above 1180 this month, and it also raises the chances that the 1180 to 1200 area will become some kind of a floor. So I'm sorry for the long answer, but we really have to provide some context. So we have to keep all these levels in mind. But going forward, I'm looking for gold to retest 1180 to 1200, and if it holds above that, then that would be final confirmation that the bottom is in. But clearly at this point, it does look like the bear market is over, and we've seen a major turn in the sector.
The action that I've seen in silver has been muted compared to what we've seen in the price of gold, and that's something that you had been predicting, that as this bottom starts to take hold, that gold would probably outperform silver, would lag a little bit. What do you see happening with silver? You can even touch on silver stocks a bit if you'd like.
Well, looking at silver, I know that we had. I'm just looking right now. You're correct. Silver is underperforming gold, and I think the reason is because we are in a deflationary environment. If you're in a deflationary environment, gold will outperform silver. And once you get to an inflationary environment, that's when silver will outperform gold. Now, if we look at the major lows in precious metals, and silver hasn't always outperformed gold off those major lows. Like if you go back to 2008, we did see silver outperform gold off that low. But if you go to the 2000 to 2001 low, silver bottomed months after gold did, and silver bottomed like almost, I think, a year after the gold stocks did. And even after that, for another 6 or 9 months or so, even after silver bottomed, it didn't really accelerate as much as we've typically seen. So it was slow to recover. And going back to the 1976 low, I mean, I don't have the chart in front of me, but silver held up really well during that period. But I don't have the chart in front of me, but I think gold may have accelerated a little bit coming off that low, and then silver really outperformed. So there's really no rule about what's going to happen coming off these lows, but it's certainly not unprecedented to see gold outperforming silver here. And given that we're in a deflationary environment, I think that's something that is going to continue. But obviously, if gold's going to continue to climb, silver will follow. But until we get to that inflationary environment, silver is not going to strongly outperform gold. Now, with respect to the silver stocks, they've obviously had a strong move with all the miners. I haven't been focusing too much attention on those, obviously, as I pull up my screen here of the silver stocks. But again, some of these companies, if they're extremely oversold, I mean, they can rally 50, 60% in a month or in a couple of weeks. I mean, if this move continues after we get some kind of a pullback, I mean, a lot of these stocks will probably have doubled within a few months' time, and that's just typical of what happens coming off these major lows when you're in a secular bull market.
Jordan, a very interesting component of the bull market that I guess we can say is maybe just started here in the last few weeks is that on days where the Dow and the S&P have dropped, even today quite significantly, gold, silver, and the associated stocks have gone up. And that's a big difference from 2008, which, of course, was under different circumstances. Gold and the stock market were both high before that crash. But to see this correlation, this negative correlation between gold and the stock market hold on a day-to-day basis is pretty interesting. So I want to ask you how you see that continuing to play out. A lot, I guess, rests on how the stock market might do.
Yeah, great question. And this is something, I think we've talked about it before, and I also had a chapter on this in my book, where if you look at the correlation between precious metals, and we'll just say gold specifically, but the correlation between gold and the equity market, it's always changing. It's never constant. I mean, there's times when one's going up, the other's going down. There's times when they trend together. But what really determines what's going to happen in the future is what's happened in the very recent past. And what I mean by that is if you go back to the 70s and you go from about 1973 to 1978, the two were moving back and forth, but in different directions. What happened during that inflationary recession, you saw gold started to go up a lot. The market went down. And then when the market recovered after the recession, gold went sideways, gold went down. It had that big 75 to 76 bear. Then gold recovered, did really well for about 2 years. Well, it rebounded steadily. And during that time, the equity market had about a 20% bear market, or maybe a little more. And then eventually the last year or so, precious metals went parabolic and the market went up a little bit. But there was about a 6-year period there where the correlation was negative between the two. So in other words, if gold was going up, the stock market was going down and vice versa. And we saw the same thing from 1997 to about 2002, 2003. And there were where at the beginning of that time, precious metals had a terrible bear market, stock market was doing really well, and then it flipped in favor of precious metals. And since 2011, I mean, we're seeing that repeat where since 2011, the equity market has performed really, really well. Precious metals in a terrible bear market, but the relationship has flipped where now we see the equity market going into a bear market, and precious metals are now what looks to be back in a new bull market. And so the reason is because in the recent past, the market was going up and precious metals were going down. I mean, you go back to the financial crisis, gold and the stock market, they were going up together. So that's why that they both went down during the financial crisis. This time is different. Now, looking forward, in the very short term, I've been looking for the stock market to rally. It's been weak over the last couple weeks. It's kind of struggled to rally. I still think that the stock market is really oversold here, and it could have a rally over the next month or two, and that could kind of coincide with a correction in gold. But Colin, looking out just over the next year or so, I think the bear market is likely to continue in the broad equity market, and gold. Again, what we could see over the next couple months, we could see a flip where we see the market rebound and precious metals have a correction, but then after that, you see the stock market break lower again, continue to trend lower, and at that point, that's when precious metals should, rebound and perform really well again. As far as the broad equity market, I don't know how much longer the bear market is going to last, but even in the scenario that the bear market ends, sometime this year or sometime early next year, I don't think you'd see the correlation flip. And so, in other words, I don't think we have to be worried about when the market does recover in the next year or 18 months. We don't have to be worried about that pulling down precious metals. I mean, precious metals are moving on their own merits. They're going to be in the forefront, and we really don't need to worry about the equity market dragging precious metals down. But I do think here, as I said, we do have to be on guard that we could see the equity market rally here for a couple months, and that could coincide with correction in precious metals.
We've done many interviews in the past, and a question that I've never asked you and a topic we've never touched on because it wasn't as relevant in a bear market as it is in the beginning of a bull market is the type of companies that interest you, the type of equity investments in the gold or silver space that are of interest to you, and if you'd like to provide an example, but of course that's what your service is for. So if you just want to profile what you look for your subscribers to get a good gain, are you looking at the majors, the mid tiers, the small caps, and within those areas, what is it that you're looking for?
Well, I'm looking at the juniors. I'm not a fan of the major miners. I mean, obviously they've had a really, really good move here. It looks like a lot of short covering there. That's why they've had a stronger move than the juniors. But I focus on the juniors, and that's because that's really where the growth potential is with respect to the producers. And also, if you just look at the overall fundamentals, as you know, Colin, I did a chapter about this in my book. The major miners and the larger companies, they're going to need to acquire the juniors because despite having this huge boom in the 2000s, tons of money being spent on exploration, nobody really found anything that significant. So there's really a dearth of projects in the pipeline for these larger companies. And so that's why the junior miners, I think eventually we could see not just a bubble, but a real mania in the next 5 years, given the fundamentals and given the fact that over the next, let's say, 3 to 5 years, these larger companies are going to need to acquire these deposits to replace their reserves and build up their pipelines. And if you have that fact combined with a gold market that is in a bull market and is going to $2,000, $3,000 an ounce, you can just see how that could lead to a bubble and then a mania in the juniors. So that's really why I focus on the juniors. I mean, now I personally like the producers, the junior producers that I think can really benefit here from the start of this new bull market. I also like development companies, so companies with projects or deposits that look like they can earn a decent return at 12 or 1300 gold. So those are the things that I'm looking at now. But also, I will start to dip into the exploration side a little bit because, again, if the sector is moving up and we're in a new bull market, as you know, the exploration companies will, they'll outperform. They can go a lot higher. And I know. Lastly, I'll just mention something about optionality because I know that's something that you talk about quite a lot, and I know that Rick Rule has talked about it with you in interviews. But if you look at companies with big projects, and by big I mean they're multi-million ounce projects. They could be economic at 13 or 1400 gold. Those are the projects that recently they're not worth anything because they can't make money at 1100 or 1050 gold. But if obviously if we're correct and gold goes into a bull market, this rally goes to 1500, 16, 1700, then Colin, as you know, suddenly these projects that weren't worth anything that need 13 or 1400 gold, suddenly they can be worth a whole lot at 16, 1700 dollar gold. And so those are also things that I'm starting to look at, because those are the companies that probably haven't moved a lot yet here in this last couple weeks that have a lot of potential to move when we see gold go to 13, 14, 1500. So those are all the things that I'm focusing on. Again, I know it's a long answer, but I'm looking at all those areas and looking at fundamentals and what I think has the best risk reward. Now, certainly when the bull market gets going, you don't have to necessarily go after the companies with the A fundamentals. I mean, if you have a very strong market, as you know, the companies with B and C fundamentals will outperform the companies with A fundamentals. But right now, most of my long positions are in the companies with A fundamentals because I think those are going to perform very well here in the next year. And also, Colin, I mean, I own those companies because I know that they could survive if gold went to 1,000 or 950. So the risk reward there is very good in those companies with A fundamentals. But as we see the bull market start to take hold, I'll look at other stuff that is a little bit more risky but can really outperform if we see gold get above 1,300 and then get to 1,500.
Sure, yeah, and optionality is a fascinating concept, especially for people interested in. I shouldn't say people interested in buying physical gold, but those that see the merits of physical gold itself and aren't necessarily as interested in mining. A lot of these optionality plays right now are trading at $1 to $5 gold in the ground, and just a few short years ago, those gold ounces in the ground were going for $100. So that provides a lot more leverage than simply buying physical metal through some type of proxy or actually buying the physical. I want to end here, Jordan, by asking you what the potential gains are. Say the bottom did just happen a couple weeks ago, and the reason I ask you this is you've put some great charts together in the past examining kind of the bull markets that have happened and how much the gains were in the first 6 months, year, 18 months. I know you might not have that open in front of you to give us the exact numbers, but what can you tell us on what investors might expect?
Great question. Yeah, I'm just thinking here because sometimes I look at the Huey and other times I look at GDX. The Huey tends to rise a lot more than GDX. But looking at the Huey, I mean, that is, I don't have it in front of me right now, but I know that was up nearly 50% before coming into this week. And that's typically what you can see. I mean, I think most gold stock indices, I think, can rally 100% within 6 months. And granted, this bottom was in December. I mean, we're almost 2 months, or actually, let me correct myself. This bottom was January 19th, I think, and we're not even a month past that point yet. And these indexes are up, 30, 40, 50% already. The Huey probably more right now. But generally, I would look at, it could do 100%. The miners could do 100% in the first 6 months. And, as I said, if we get a correction here for a month or two, then the next move up after that, that would obviously be a strong move. And that's kind of where you get your 100% in 6 months. And, maybe when you get to 8, 9, or 10 months, these indexes could be up 150, 175% or so. So that's just a general rough guess, but it usually fits in that type of ballpark. And then looking at, a lot of these juniors, I mean, they can move substantially. I mean, some of them can double in a month or two just coming off their lows. So, but with all that being said, Colin, it's important for listeners to do your research and, I should say you never want to chase gains, even though these gains, I mean, like I said, we may have a correction for a month or two. And that would give us a chance to get in on these things at better prices. But just do your research. I mean, there's a lot of stocks in this universe, and you don't necessarily have to chase something that's already gone up 100% or 75% the last couple weeks. Just sit back. This bull market is going to last for a long time, and you don't have to plunge all your money into something right now because you've already seen it go up and you're afraid it's going to go up without you. Just do your research. Sit back. Let some weakness come in. And then pounce if we get that weakness.
There you go. Well, Jordan, thank you so much for coming back on the show. All of our listeners really enjoy your weekly updates that you put out with your charts and research through Palisade Radio. For any of our listeners interested in finding out more about Jordan's work and potentially subscribing to his free and premium services, just go to thedailygold.com. Jordan, thanks for coming back on the show.
Thanks so much for having me, Colin.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, troll, did you hear what's going on in Yemen? Or are you too stupid?